Good evening, you're watching Hot Commodities right here in ET Now. I'm Ajay Sharma. Let's take a look at the headlines in the commodity space. Brent crude prices are trading near $110 a barrel mark after posting their biggest daily gain in nearly 2 months in a previous session, on hopes that healthy demand growth from the United States and China would be seen. Gold prices continue to hold above the $1,250 per ounce mark, but strength in equities have taken the shine off the bullion to a certain extent. The rupee continues its weakness and slips in trade, tracking sentiment in equity markets. The strength in the dollar also dents sentiment. The currency ends the day at 59.29 to the dollar. Let's talk about the precious metals first. Gold prices, they'll come up on your screen, are finding some kind of a base formation happening above the 1250 mark, and today also it opened strong, then traded mildly in the red, but now about 0.25% gain as far as this is the global prices for you. Also pull up the MCX code and you would see what's happening back home as far as gold prices are concerned. The strength in equities and a stronger dollar is also something which is playing on the mind of precious metal trader. So it's come back 46 rupees in the green now. During the day around noon it was around 40-50 rupees in the red, so volatile but with a positive bias. Take a look at how silver is trading. Silver too is tracking gold, but around noon there was some pressure coming in, but let's see, by now they may have bounced back. That's exactly the scene, but not the same extent as gold prices. Let's also talk about the energy space. In the energy space, crude prices have moved higher today, slightly higher. Brent crude is trading above the $110 mark, not hugely above, but still higher than 110. Pull up the MCX crude and the picture will be clearer back home how that particular quote is trading at about 0.5% in the green. So 30 rupees 62.10 is what it is trading at. The up move has come on the back of hopes that demand would be improving as far as US and Chinese market is concerned. Vijay Bhambani from BSPL India and Kishore Narne from Motilal Oswal, both of us are joining us on the show to discuss possible trades in these two areas. Gentlemen, good evening and thanks a lot for joining us. Kishore, let me come to you first. How are you looking at precious metals? They have been firm past couple of days, and today too, strength is seen. Is it opportunity to short, or you think that high Chinese inflation data may be supporting precious metal and hence may not be a good idea to short right now?
Good evening. I think looking at the market is not finding real impetus for the downside because obviously we have seen some crack in the last month, and I think I don't change my medium to long term view, which has been bearish for a while, and we continue to be bearish on precious metals for medium to long term. But short term, I think I'm looking for a decent pullback to around $1,280. In India, maybe around 1,000 rupees upside, probably towards 27,000 is a possible target for short term. So I would like to go short on higher levels at 27,000 for positional purposes. But for intraday or maybe day or two, probably one can go on buy gold on MCX for the 25,700, 760 as a stop loss, and look for targets close to 26,000, 130, 150 purely intraday purposes. So maybe another couple of days there could be a bounce back until unless this 1230, 1225 holds. So there's a decent possibility of 1280 coming back.
In fact, that is exactly what happened in trade. About 1.5 hours before the mark, back there was some strength seen, and that's why it found some support. Vijay, what would you read for gold and silver in particular for the intraday purpose?
Ajay, I would still maintain my view that the medium to long term picture still remains bearish. Where the upside potential is concerned, the 5th August futures on the MCX in gold may just surge up to 26,550 to 26,600 if at all. But high levels will be shorting opportunities rather than bargain hunting or bottom fishing. I would still think that this is a short covering based rally. It is more of a technical pullback than a trend reversal. So at this point in time, getting into the greedy mode and buying would be fraught with risk.
It's a short covering strength being seen in the gold prices. That's the gold prices for today's action. But generally, Vijay, of course, maintains, along with Kishore, that this particular end of the market is heading lower. Let's talk about energy then. What's happening in crude oil prices? Crude oil past couple of days also have been on the firmer note. Any convincing trade, Kishore, you spot in MCX crude?
I think crude, short term, there is a little fundamental shift happening. I think the US WTI crude per se is slightly stronger on expectations that inventories will continue to fall. I think probably going into June, July, I think July, probably mid-July, the inventories will continue to fall in WTI, which will make it slightly better than Brent. So if we are talking about Brent, probably again, which is driven by primarily by the Middle Eastern and the Asian markets, the Ukraine and Russia is impacting the Brent prices, which is again, I think the talks have been moving slightly positive. So I think the Brent is losing its premium. So at this point of time, because the MCX is a WTI crude, that remains positive. So for the day, one can buy with stop loss of 6,130 or so, and targets could be close to 6,230, 250 kind of levels.
Right. Vijay, before I come to you, just take a look at how the April FDI data has been coming. In fact, RBI says that for the month of April, inflows were $2.6 billion versus $3.23 billion. It shows a fall even on a YOY basis, but perhaps on a month-on-month basis, there's an increase, and perhaps rupee is something which where we taking a closer look the rupee market of the traders over there. It ended weak today, but we'll come to that. Vijay, what's your call on MCX crude trending lower, you believe?
I think so, Ajay. I think the overall outlook still remains down, although like gold, the probability of crude making a technical pullback bounce to the 62.30 being the primary target, and 62.65, give or take 10-15 rupees here and there for emotional turbulence, is where it should exhaust at. So like I mentioned yesterday also, I'm still seeking short selling opportunities on crude rather than going out there and buying, because I think at higher levels crude prices will get sold into.
Gentlemen, stay with us. Let's also get you a global opinion coming in on bullion. Adrian Ash is the head of research at Bullion Vault, joining us live from London. Adrian, thanks a lot for joining us. Good evening. What are your views on precious metals right now, in the light of how the ECB commentary has been, and also the decision of holding rates? Perhaps that's a bigger factor, smaller factor coming out of Japan and the data from China?
Well, clearly the ECB is looking to try and do something about the euro strength. I think trying to devalue the euro after what we've seen already from the Bank of England with the pound and the US Fed with the dollar. I think it's going to encourage people to look again at gold in terms of it being a hedge against monetary devaluation.
Adrian, our experts back home in India believe that gold prices are heading lower, in a medium-term basis. What are your views? Where do you think gold is headed in the near to medium term?
Well, you often see a lull in the way the gold price moves, kind of between June and August, often then with a move in September. I think it would be unsurprising to see more flat sideways action this summer. Probably, really looking at the range that we've seen over the last 12 months now, which is kind of 1,200 up to 1,400.
Right. So finally, in what range do you see gold prices trade over the next few months on a longer term basis? 1250, 1300, what are the levels we are talking about here?
Well, I think somewhere between 1200 and 1400 now has been the range for about 12 months. The gold price has been relatively quiet since it reached 3-year lows last summer and then got back there again in December last year. I think a lot of analysts longer term are looking at, if there is a low below that level, it's likely to come somewhere in maybe 1050, 1000. On the upside, there doesn't seem to be any immediate catalyst. We saw the reaction to the Eurozone monetary policy last week. There was a little pop, but right now I don't see gold prices moving higher very, very quickly.
Adrian, one little more micro factor is that the government of India is taking several measures in order to discourage investors moving towards gold. Remember, India is one of the large markets and consumers of gold and does impact pricing on a global level as well, the consumption trends here. How do you see the fall in demand, if it does happen, in the largest market on in the world as far as gold is concerned impact the pricing?
Well, one thing we have to consider is we don't, of course, know what the size of smuggling into India has been. So it's unclear just how much has actually been lost from Indian demand over the last 12 months. Another point in terms of India's impact on the gold price there has been that the price actually stopped falling last summer before the new import bans were implemented. So India's demand really doesn't move prices higher. I'd be very surprised to see prices rising as a result of the easing of those restrictions under the new BJP government. I think it's important to note that Indian demand, like Chinese household demand, tends to put a floor under the market though. So I think where we saw the price action down to 1,200 and just below last year, I think we won't well see again a kind of floor coming through there from consumer demand in Asia.
All right, Adrian, we'll let you go on that one. Thanks a lot for joining us on the show this evening. Well, Adrian was talking about an important data point, which is the inflation data from large economies, which may be providing some hedge to the gold prices. And China's annual inflation rose sharply for the month of May to its highest level in 4 months, easing concerns about deflationary risks in the world's second biggest economy. The consumer price index rose 2.5% last month, accelerating from 1.8% for the month of April. Of course, there is a positive impact of it happening to a certain extent on precious metals. Base metals taking a knock, but we'll talk about it later. Time for a short break over here. Up ahead, we put the spotlight on agro commodities and strategies which you can use at that end of the commodity trade. Welcome back. Well, amidst the growing concern of a deficit monsoon this year, D. Sivanand Pai, head of long-range forecasting at IMD, states that rainfall is likely to be 93% of the long-term average, with 3 out of 4 key regions witnessing below normal rains. This is some kind of a bad news coming in, at least at the start of the monsoon. However, he insists that it is too early to call it a drought year as yet. Hear about.
The average over the country as a whole for the season June to September is likely to be 93% of the long period average. The monsoon in the 3 out of the 4 regions to be below normal. We have not given any drought forecast, but at the same time in the northeast India it is close to normal. And the concept of drought is a different. Rainfall only you can talk as a deficiency, but when the rainfall deficiency will start impacting on the agriculture, then only you will start calling the drought. But wherever there you have got a proper management of the water, wherever you have got an irrigation facility, you can manage the deficiency in the water.
Kishore, you were listening to the gentleman from IMD, and over the last 24 hours, the kind of commentary which has been coming. How is the commodity market reading these initial, comments coming in? Because equities we saw was slightly nervous, but did not read too much into this early commentary.
I think the agricultural markets actually have been positioning themselves for El Nino because this has been discussed for a while now. The markets have been anticipating some kind of a negative impact of monsoon. Met has been slightly optimistic earlier, and then since yesterday onwards there have been a lot of inputs from the Met that probably we might see a 92% rainfall. Again, most of the times Met forecast is plus or minus 5%, which can take it further. But most of the times, if we are particularly talking about the crops, it is the quantum of rainfall is the first thing, and the second is the distribution of the rainfall. If the distribution has been proper, and if we don't have large gaps in between, then more or less we will be doing fine. But if there is a large gap of 15-20 days in between, and the distribution is not proper, some areas get excess rainfall and some areas get a little less, then the problems will start. So at this point of time, global agricultural commodity markets are being bearish because we have a significant glut in sugar. We have one of the record crops of soybean coming up in US. Brazil and Argentina are poised with good crops this year. So I think globally the prices are not going to rise further. But in domestic markets, yes, few crops like guar probably might be seeing an up move. Again, the kharif crops which could see some price movement segment is the soybean, which is yet to be sown, and some of the pulses especially will have a greater impact if the monsoon fails, especially in Maharashtra and MP.
Let's take a quick look at how the agri trades are panning out right now. There was mixed trade in at the start, but wheat was trading slightly in the gaining side. Let's pull up chana, pulses, jeera, all these agri commodities. That's wheat futures for you, trading almost 4 rupees higher. 1480 is what wheat is trading at. Chana is trading 6 rupees higher right now, though at the lower end of the trading range for today's session. 2721 is what chana is trading at. Pull up the other agri commodities and let's see whether same kind of a trade is happening there as well. That's soybean futures 15 rupees higher. Jeera, sugar, all the other ones, potato will also come up on your screen right now. Jeera is trading slightly flat, just about 10,700 is the kind of trade happening there. And finally, sugar futures at day's high, 0.5%, 14 rupees. Vijay, your call on sugar is heading right. But before we talk about specific strategies, what's your assessment? This entire commentary about from IMD started coming, but when will the market actually start reacting to this? By when?
Ajay, typically I have noticed it's around the 20th or 25th of June that the markets start to react on the monsoon front, because the arrival, the onset of the monsoon invariably tends to be a few weeks off, either early or late from the expected date of 10th of June. That also coincides fairly well with the expiry of the June futures in the agri commodity segment on the NCDX, which is standard at, on the 20th of June. So it is the July futures contract which will actually see the most of the price volatility or the clusters of trader activity polarized around the news flow from the IMD. My guess is I would sit tight on the agri commodity futures prices at this point in time. I would take a call either close to expiry or after expiry of the June future series, and then go out there and make a bid for buying at lower levels. I'm fairly clear that significant declines would be buy opportunities, whether it is chana, whether it is wheat or sugar or even soya oil. My guess is lower levels are likely to get bought into, because most of these prices are either nearing the oversold levels or are there itself on the short-term charts.
Kishore, what are your specific strategies in the agri space?
I think the short term we can go out and buy refined soya oil at maybe on lower levels to around 664, 665 levels, with stop losses of around 659 and targets of 665, 671 kind of levels. Again, at the same time in oil seed segment, mustard is looking stronger. We can go and buy with stop loss of 3405 levels and target of 3490. But on the pulses side, we have only one pulse which is listed, and that too a rabi crop, so the monsoon doesn't really impact that. That is chana. That feels much more weaker even further. So any rallies in chana towards around 2800 to 2820 kind of level should be seen as selling opportunity for lower side targets of 2740 or 2720 kind of levels.
Vijay, very quickly, what are your trading calls as far as agri is concerned?
Ajay, I would like to ride the upside on sugar futures in the June future series. If I do get 3080 to 3085, I would not really mind booking at least part or most of the profits that I have accumulated on sugar. Soya oil, if I do get it at sub 680 levels in the June future series, I don't really mind going out there and going long in small lots.
Vijay, of course, stays with us. Kishore, we'll let you go on that one. Thanks a lot for joining us. Time for a short break. On the other side of the break, we'll put the spotlight on rupee, which has been slipping for the last 2 days.